Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Friday, the 18th of July, the TGI. Thank God it's Friday, the 18th of July, Bull versus Bear webinar. Steve Miley here on the call for Trade Day. Welcome, everyone. So we're going to go through our regular, usual run through in here today. We're going to take a look at the calendar, what we've had, what we've got coming up. On both the macroeconomic and the earnings side. We'll take a look at some articles from the major news wires. What are the geopolitical, what are the macroeconomic fundamental central bank data-driven events that are shaping financial markets right here, right now. And we'll also then take a quick look at the charts and how things are shaping up. And the technicals. So first of all, let's look at the for today, going into today. So Michigan consumer sentiment. Actually, if I'm going to just dupe this one up and we'll look back before we look forward. So yesterday we had the US, where are we? Retail sales data. You can see green here. US retail sales month to month coming at plus 0.6, expectations of plus 0.4. So better than expected. Markets like that and were higher. The US stock averages, the NASDAQ, the S&P, the ones that you guys mostly trade, hitting new all-time highs yesterday. NASDAQ's pretty much been nudging away at new all-time highs most days over the last week. The S&P hadn't made a new high since its high from last week, but did eclipse that high yesterday on the cash market, making a new all-time high. So positives there, positives coming through from retail sales. We did also, and again, looking back before we look forward, yesterday we had earnings after the, TSMC, where are we? Is that, have they got down there on the ADR? No. But TSMC, Taiwan Semiconductor, yesterday put out some very good numbers. That helped the broader tech industry, the tech sector. And so the TSMC numbers helping markets high. After the bell, we got Netflix numbers. Now here you see green and green on both the EPS, the earnings per share, and on the revenue numbers. Market actually a little bit disappointed though. And if we go here, what we'll see is the headline: Wall Street futures edge up overnight as optimism over economy offsets Netflix fall. Yes, it did fall in it fell in post-market and then this morning in pre-market trading, but it's only down slightly in here, 1.5% lower. And given that it's up 43% this year alone, hardly a big move lower, but a little disappointing. I think what it is in here, the market gets very ahead of itself and wants better and better and better numbers. Remember, Netflix no longer, I'm pretty sure, this no longer publishes the subscription numbers as they used to, and that used to be the one that everyone used to look at. But nevertheless, despite a small slip in Netflix overnight after their numbers, after the bell last night, market's still looking positive and kind of marking time. Sitting here at the moment, we're at a slight edge up on the overnights. If we go and take a look at going into the data for today, it's fairly light on the US front. We get the Michigan consumer sentiment. This always comes out on Friday, and sometimes people miss it. So don't forget this. 10 o'clock Eastern time. It's not the normal release time either of 8:30. So Eastern is 10 o'clock Eastern. So Michigan consumer sentiment, watching out for that to round us off the week. On the earnings side, it's nothing really particularly big. We see all the earnings already out in here for today. American Express, Charles Schwab's, etc. in here, not really impacting markets. Really, we're looking into next week now before we get into anything really significant. And that's going to be out here with Alphabet, Tesla, Alphabet, aka Google, on Wednesday, and Tesla as well. And then I think, where are we? Yeah, then it's into the week after that when we get some of the other big tech names. So we're watching out for those going into next week. But for today, all most of the earnings are pretty much we're going to be looking at or even thinking about are already out in the market and not particularly impacting the major indices. Just reminder in here, the Fed go on their blackout period, the blackout calendar. Remember, that's 1.5 weeks on the weekend, 2 weeks before a effectively, so 1.5 weeks. So the Fed meeting is over Tuesday, Wednesday, the 29th, 30th at the end of this month, with the announcement on the 30th. A week and a half back from that, 2 weekends before that, that's this weekend, the 19th is when the Fed go on their blackout period. So today is the last day for any Fed speakers that we have coming up. We did get, where was it in here? Waller. Yeah, Waller was on the wires yesterday saying that Fed should go. And by the way, as I said there, going back to the calendar, where's the calendar? Going into today, we've got no one scheduled to speak at the moment as far as I can see. So nothing potentially more from the Fed. Waller was on the tapes yesterday, though. He's a dove anyway, but saying he felt that they should cut rates in July. That's his stance anyway. He is more on the dovish side. And then the other headline in here, this is going to the morning briefings America's going into today. So crypto gets major win as Congress passes stable coin, so positives for crypto there. But nothing else particularly interesting in here. They're focusing on Netflix here, but nothing really particularly interesting that's going to impact into the broader indices in the morning briefing America from Bloomberg. Stocks rise as U.S. strength earnings lift optimism. U.S. strength there is referring to the retail sales numbers from yesterday. And the earnings continuing to come through generally better than expected. So global equities higher on Friday. US futures looking positive running into today, having hit new all-time highs yesterday. Positive surprises with new stock records again in here, focusing on the same from Reuters. And then Fed's rate cut delay intact as inflation fears override Trump pressure. So kind of slightly different stance, but we are expecting the Fed to keep rates unchanged, and risk of high inflation means caution on rates. So that's kind of what we anticipated anyway, going into the end of this month. As we said, global shares rise. US consumer holds up. That's a point to the retail sales number from yesterday and from the Netflix numbers. So on the overnights in here, Asia, Hang Seng doing particularly well, 1.3%, with the Japanese Nikkei down 2.2%. European exchanges today, both the UK FTSE and the German DAX, little changed, with the French CAC up just over 0.25%. And on the futures this morning, you see pretty much unchanged, just nudging very slightly higher on the US futures. On the interest rate side, you can see there the markets looking into this is the Fed Watch tool for the July meeting. You can see 95% chance of them staying unchanged. As we've said previously, though, bets now really on a September cut. But it's only just above 50-50 in if to cut or not by September, but certainly by October, only a 20% chance of no cut. So potentially up to 2 cuts by October, and certainly by December, we're looking for 2 cuts by the end of the year. On the yield side, on staying with the interest rates on the bond markets, you can see markets have been tracking to higher yield. This is the 10-year. We looked earlier in the week about the 30-year and the 10-year. The 30-year nudging above earlier this week, above 5% yield. But you can see the market just trading back to lower yields. It's very much caught in this range. So it has gone to this towards the upper end of this broader range. You know, the market, if you look here, but apart from this spike up here and this spike down here, the market here has been pretty much between 410 and 465 for the last for all of this year, apart from these spike outs, and we're kind of towards the edge of the upper edge of that range, but rolling back lower in here now. So nothing really to talk about there. On the US fixed income side, we do remain bearish on price right the way across the board, given on the short to intermediate term. Bearish on price, looking for lower prices / higher yields. But on the indices, obviously having made a new all-time high yesterday, breaking out to the upside, but having been caught in this kind of range in here really, on the technicals, being very much sideways for pretty much July, but and a couple of attempts to break out. Could this be the breakout in here that we're seeing? We came off support on the S&P, hitting new highs, breaking above the peaks, and a similar story for the Nasdaq, new highs. Nasdaq's been more of a grind up, actually making slower new highs throughout July, but breaking out and potentially further up. So just check out those Fibonacci extension levels as upside resistance targets for both the S&P and Nasdaq. Remember, you can access this in the members area below where you are right now. If you're watching this live, the left-hand column is the daily technical analysis, looking at both the bond markets, the equity indices, and we've also got gold and oil in there. So take a look at that. And then this weekend, guys, don't forget to check out in the middle column below where you are in the members area. We have the macro summary, the macro matters, that fundamental research we put out, a recap of last week and a look ahead to next week, or a recap of this week and a look ahead to next week. So check that out. That usually goes up on a Sunday afternoon / evening. All right, guys, I'm going to wrap it up there. I'm going to say TGI, thank God it's Friday. I'm going to wish you all a great trading day. Going to wish you all a great weekend. Take care, enjoy that, and we'll be back with you with another Bull versus Bear webinar on Monday. Bye.